Hi guys, this is Nikki, you also known as Faces Trader, and thank you for watching the Awesome 10X channel. I'm actually outside right now, so I'm making a broadcast stream. So I need to put on my face mask. So I just hope that you could still find the audio audible. So right now we're gonna discuss what happened in the U.S. So actually, like last week, it was the first time that we actually saw the market react heavily on the downside for your Facebook and Google and Twitter. Definitely the trio of your advertising got a boycott on their ads. And definitely a lot of people are now seeing that the market can actually fall, not just because of the COVID spike in cases, but because Facebook and Google both are comprising 20% of your NASDAQ 100. I'm going to show you the chart of Facebook right now. This is a very ugly chart, dropping 9% last week. There is a support here at 216, but definitely it got crashed and really falling down fast. So this drop is attributed to, of course, the withdrawal or the Facebook boycott on ads of Unilever, Ben and Jerry's. You've got Coca-Cola and a lot of other North Face and a lot of new advertisers now following suit for that sell-off. So let's see. You've got these types of supports. You've got a strong support here at about 178, 180. So we're looking at whether we can actually see a support. There's two kinds of supports here for Facebook. You have support here at about 201 tonight, and a further sell-off would have a sell-off back to about 180. So it's either a 10% drop or a 20% drop. Now, you might say to yourself, what should I do with Facebook? Usually, like what we've seen in the last couple of times when Facebook had a negative Congress scandal, I will show to you the price ranges of Facebook from about 218 with a Congress data leak before. Facebook managed to fall 40%, and with advertising decline, Facebook actually fell about 37% during the COVID time. So definitely with advertising as a potential headwind going down, with digital advertising already signaling that they would actually cut their spending, whether it be a statement to being woke or for just simply trying to ride on with the Black Lives Matter movement, or just really cutting their spending. A lot of people are seeing that this drop on Facebook could potentially hit us down. And this drop, let's see, if we go 40% down from its peak, 40% down would lead us to about here near 150. Now, I don't think that it's as bleak as what the bears would say. But I would say that a 20% drop from your peak at 200 gets some buyers at about 200 to 200 to 180. So you want to see somewhere here about 200 to 180 to actually be buying. Now, same thing. I find that the market is, of course, highly valued. So it's a bit overvalued, such that the market on a negative headwind of this boycott would actually present an opportunity for the shorts to actually have some money on the downside. Now, this downside, I think, would be limited for Google at about 1.2 to as much as 1.1. So that's still a downside drop of at least 10 to 20%. So what I do here is to actually prepare myself to buy somewhere here at 1.2 and buy somewhere here at 1.1. So those are like things that I would take a look at. Now for Twitter, which is a weaker name, wait up. I think a lot of boycott on Twitter as well. So essentially, it's really the digital advertising space, everyone being boycotted. Um, the companies, the advertisers, the companies want to make a stand, and it helps them save costs anyway. So having no ads is an ad in itself. It's a statement for them. So far, we're seeing that there is support for Twitter here at about 25. That would be a 10% downside move today. So definitely for Facebook, Google, and Twitter, any 10% drops or 15% drops would actually be looking to buy. Why is that so? Well, of course, for those who aren't aware, Facebook actually makes $20 per user. That's the average revenue per user. That's about 20 billion $20 billion, and that's really significant. So any hits would actually be an opportunity, I'd say, for a secular long-term winner. Your market cap is 600 billion. So Facebook is a name that I'd be looking an eye on this week, definitely. Now, this week, these are names that I'm actually looking at, whether this week or for the end of the July. I'm looking to get into Tencent. Tencent might be giving us an opportunity to enter at about 480 to 435. So the reason why I really like to enter Tencent is because of Valorant and Brawl Stars. So there's really strength in their games. So definitely, any strength in mobile games is a safety net for a COVID pandemic world, which badly needs a lot of cash flows. And I think that there is no problem in this company. So entering 480 to 435 is something that I'm looking at. Now, I like online education still. So Pluralsight is a name that helps workers, those who lost their jobs, to actually upskill and get themselves acquainted to technology. There are free courses in Python, Java language, and so forth. So I'd say that this is a name that I would say would be resilient on any downticks for this week. So if this drops anywhere from about 1460 to 14, I'd actually be more willing to buy on downturns. Now, something to note. Let's look at your news. Asia stocks retreat as virus threatens the economic reopening. Definitely, we have seen news already that NBA is gonna delay. Disney's gonna delay their NBA, and Disney's gonna delay as well the reopening of their theme parks. Let's take a look at on our watch list. On our watch list, definitely you've got Facebook, Twitter, Google falling big, 875%. Those are big, and then it's pulling out all of your pulling a lot of your other segments down together. But definitely, it's a digital advertising boycott that's taking them down. Nevertheless, you could see that Akamai actually had a great news last week, and I'd say that this strength of Akamai will continue. So for those who aren't aware of, Akamai is the world's leading CDN, content delivery network. That means that when you're watching your Amazon Prime Video, it's actually Akamai making sure that those videos have no latency and no problem. So if you are very bullish on Fastly, I'd say that you have to take a look on Akamai, because Akamai is a long leader here. Very much like in the last 20 years, Akamai has been handling to you all your Garena Free Fire, all of your League of Legends, Riot Games. They've got partnerships with, of course, Amazon, C Limited, EA, Electronic Arts, even your even your Fortnite. So basically, all of the games that you are watching, even your Netflix, it's actually already being powered by your Akamai. Fastly is popular because they power up Shopify. So those things are actually a good thing. You have a secular trend here with you. We like this. We like Akamai. Any drops at 100, we would continue to buy. Those who have Akamai should hold on to it. I'll share to you what the news on Akamai and Amazon is to make you read about it. There was a news last Friday. That's why it was outperforming, and I'd say that that would continue to outperform. Okay, well, the broad market tumbled yesterday. Both Limelight and Amazon and Akamai investors are mulling the Amazon Prime Video Live. So a report yesterday pointed to Amazon gearing up to add live 24/7 programming to its Prime Video lineup. This obvious discussion might center around how this could differentiate Prime Video from streaming rivals as Netflix and Disney. But Raymond James says the move has the potential for material revenue gains for vendors like Limelight Networks and Akamai. The team at Ray J notes Prime Video accounts for about 30% of Limelight's 2019 revenue. With the broad market tumbling yesterday, both Limelight and Akamai outperformed, with Akamai one of the few names to go green in the session. So let's take a look at LLNW's chart as well. With Akamai, we're seeing all-time highs possible for this name with that Amazon Prime Video partnership. And then with Akamai, I'm confident, but with the Lime network, because I didn't study it, I can't say much about this one. But definitely, they are both benefiting on that news. Now, the beauty about Akamai is that Akamai is not just a CDN. It's not just the world's CDN provider. It has good cash flows, and it actually is also a cybersecurity play. So let's see. You could see that Limelight Network definitely benefited on that news. You could put it on your watch list. It already has shot up from about $5 to as high as $8. So you might be a bit late. But you want to put this on your watch list. It's already trading at your almost at your what's this? Is it the 10-year high? Yeah, it's already trading at your 10-year highs. We'll put it on our watch list, LLNW. So it broke six. I'd say that any 20% drop here back to six is going to be supported with a few sellers here at about 8 to 10. So we're seeing a new range here from about 6 to 10. A few names that you might have not been watching that I think is on the upside is, of course, Farfetch. So Farfetch had reported great guidance for their earnings. This is the online e-commerce platform for your Off-White, for your Burberry, for your Coach, for everything like luxurious. It's all catered by Farfetch. So you could see that there was a strong run-up, about 100% already from about 7 or 8 nearing 16. Now, this breakout of 16 is actually significant because of a raise in guidance. Any drops for Farfetch would be supported, in my view, somewhere at about 15 to 16 below. So let's say Farfetch drops anytime this week, you might want to check it out. Other names, no, let's take a look. News-wise, I think like everyone wants the market to crumble, but I'd say that you have to just be aware of what names that you want to buy in case it does crumble, because we could actually see that the market is still firmly on the bullish side. Everyone, of course, would want to get into fastly if it would fall, but the thing is, you don't want to chase these names on any. On any, you don't want to chase if you don't know how to enter. All right. So a few names that I want you to take a look at, of course, is GAN and Gumbel. GAN Limited, of course, is something that has been a new IPO in the market. It made an entry in the sports betting ETFs because GAN Limited handles it essentially helps all your land-based casinos to shift online. That the same way Shopify helps your brick and mortar retailers go online and manage. So you could see a very strong support on GAN Limited here at about 2350. So this is a typical bullish flag. As you could see here, GAN Limited is very strong. It had a deeper correction early on, like here from about 23 to 18. We got an entry here. Those who were very early got a support. Honestly, me personally, I got only an entry here at about 18. And then I'm now looking to enter if it drops back to about 21. So this is in my list for our buying list. I'm also taking a look because next 2 months, Tesla's going to have a battery day. Of course, that's September 15. And right now, I'd say that all of your electric vehicles are on the way, with Tesla actually probably reporting a good production update by September 15 for their delivery of their cars. So Tesla already showed in their Chinese Passenger Association, there was a report that Tesla already delivered 11,000 vehicles for the month of May. And if you just think a look about the potential 100,000 cars being delivered, that would be about $10 billion revenues for Tesla this year. So with those Shanghai Gigafactory already churning out those cars, and you can actually watch the Jay Leno actually had a very good review of the Tesla Model Y. That would be the $62,500 car. Just check it out. Just search it. Tesla Jay Leno review. It was up. It was out released like I think 4 days ago. So something that you might want to watch, like the Model Y review 6 days ago. Yeah, so definitely I'd say that on dips, like you want to enter this at about 820 to about 700 in case we get an entry here. So this is something that most people are either aware of or not. So you want to check it out on drops here within the next few months or next few weeks. Let's say if we can get an entry. So right now, we're gonna make a bet that the market would hit on the downside in the short term, but we want to be on the lookout to actually buy names that we really like for our long term portfolios. Watch list these names: esports GAN, esports entertainment GAN and Gamble. You want to watch them both. Gamble isn't with GAN, it's safer because GAN already is profitable. Gamble doesn't have earnings yet, but this is a play on your on people wagering on potential League of Legends and esports Dota 2 betting in the next few years. So you've got a credible you've got a credible management here, so you want to put it on your watch list just in case. And GAN is more safe because it already has software partners like Flutter. So Flutter is already the leader of your FanDuel. If you are betting on sports, if you are aware of 10 National Gaming's sport bars, tool sports, so it's actually being handled by by GAN. So it's like the back end there with 80% gross margin. So you want to see it as a SaaS name. Flutter is trading in London Stock Exchange. This is really a big company, big conglomerate when it comes to videos. Sorry, not videos, but online casinos, online sports betting. So this is the owner of your FanDuel and PokerStars. You can see this is a very strong V-shaped recovery because this is typically almost all of their businesses are actually doing online. So just as shopping went online, casinos are actually online as well. So if you want to play the online software structure, Motley Fools actually consider GAN as a online, like similar to Shopify for online casino space. So you might want to put that in your watch list too. Let's see. Now, of course, you know that I call resilient names as Don Z, but as you could see, all of these resilient names have started pulling back. You've got Datadog and Netflix pulling back. I'd say that drops of Netflix near 420 is a good entry point. So I mean, I'd love to actually see the market correct a bit because it's actually healthier to see the market correct rather than continually go up. Nevertheless, I'd say that there will be mixtures. So some names would be continuously bought up. Definitely C Limited would have a lot of buyers should it fall down to about nearing 90. Let's see if it will actually fall. So we are seeing that C Limited had a huge uptick from about 35 lows in March to as high as 115. That is 100 plus, nor not just 100 plus. It's actually 200% move. So this drop, maybe I am just like trying to wish for a drop near 75 or 80, but a potential drop could be limited here at about 90. So let's see whether we actually get a fall. But these are the names that you want to put an eye on if it does fall. Definitely, some names that you want to put an eye upon, of course, are the biggest great names. People are revaluing Spotify. Definitely, with a Goldman Sachs upgrade last week to about $280, Spotify continues to going strong. It actually stayed strong here at about 265. Any rallies could be capped at 280 though. So upside is quite limited, but any drops nearing 234 or 240 below would actually be bought by some buyers. So bulls continue to reign on here at Spotify. Let's put our buy list here at about 234 just in case it actually gives us a drop. So portfolio wise, I'd say that you have to have a little bit of cash this week just in case that you have the opportunity to buy Facebook's, Google's, Twitter at a discount. A 10% discount is great. And their drops would actually enable you to have your Nasdaq breathe a little while. We need a break. We need Nasdaq to breathe here at about 9.4. So there will be definitely choppiness. I foresee choppiness after a 50% move from about the lows, from 6.6 to about 10,200. You might want to have that breather. So definitely you'd have your weak names falling down and of course, we don't want to talk about weak names, but sige, I'll explain a few weak names. Some of the weak names that I foresee happening would be Disney falling down nearing 105 this week. So any drops here to 105 to 95, those who want to buy this for your long-term portfolios, wait about 10% as we are seeing more theme parks closed and delay on reopening. So I think 5% of NBA players are already positive in COVID, so they're gonna have to delay for safety measures. You've seen a lot of like your names, your value names falling down because definitely they are getting hit on the COVID and the reopening fears. So you can see that they are falling down like flies. Not so you don't really need to be very much in a hurry to get into these value names. Like there's no hurry to get into some names like Nike or Starbucks. There's no hurry after the bad earnings report of Nike, which is of course very much common sense. You could see that Nike should fall here at about $80. Wait here at about 84 to 77. So you are seeing these red down ticks. So there's a lot of these red signals that are cautioning you to actually be a bit of bullish here lower. There is a downside move of about 93 to 84 is a downside move of about 10%, right? Yeah, so you are seeing a potential 10%. So we're seeing a potential downtick move for Nike, Disney, Facebook, Google, Twitter. So with those names falling possibly 10% this week, you might have a chance to actually enter names that you believe are strong uh, on a discount. So just wait it out. Like give yourself a chance for the market to breathe a bit and let it go back near about May levels. So if we go back to about May levels, that will take you for your Nasdaq. Assuming we actually fall, let's estimate your downside. Your main levels is could be as low as 9,000 to as much as 8,500. So I mean, how low can we go? I think like you could estimate that 9,000 to 8,500 is a potential downside rally. Sorry, not rally. Downside choppiness could go as low as 9,000 to 8,500. So with that impending potential downside break, you've got people actually betting, of course, last week for volatility to increase this week. So you could see like your volatility, people started buying puts again, UVXY. They were buying UVXY last Friday. Here you could see that people have been buying up this 35 area. That would be 200% higher than your $10 area here. This was your pre-COVID time. Then your second wave here is a higher low. This was the Robinhood insanity. Now the COVID spikes in USA. So with that, with a lot of COVID spikes, you would see that people would continue to trade a range from about 35 to maybe as high as 48. So we've got a huge range. That means that you could see a potential 20% downside in your big caps. Big caps would be your. I'd say that it's really more on the digital advertising more than anything. So yeah, so yun, I just wanted you to know that look out for the downside for Facebook's, Google's, and I'd say that in some area, like people are saying that there would be a shift on the trade desk, but I think I disagree with that. I disagree that the Facebook digital advertising cut would actually shift to TTD or Roku or Pinterest. I don't think it's a shift. It's really just a cut on digital advertising. So those who have TTD might have to be careful for a 20% drop as well, as digital advertising as an industry could be cut. We have seen really bad earnings for digital advertising components. Google had didn't have a great earnings, neither the trade desk, neither Pinterest, neither Roku. So let's assume that barring bad news, then these things would actually have a drop as well. Sadly, of course, Roku is a streaming giant, an agnostic platform. Just this week, they actually had a concert showcasing live Shakira and Coldplay. I think that happened Saturday 2 a.m. in the Philippines. So that would be about Saturday 2 p.m. for USA. Either way, if Shoroku drops near 110, this would still be a buy. So every name, I think, you have to be open to your eyesight that you have a downtick of about 10% this week. So I hope that you are ready in case we actually have a downturn. That's it. Thank you and hope to see you again tomorrow and see you again, Awesome 10X channel. Bye bye. I'm done.